we got to 10, 15 trucks from one distributor. They started sabotaging us.
Yes.
So
yes.
What trucks weren't being loaded on time. So the prices changed.
Last minute when you're going to pick it up.
Yes.
I don't know, it's not this price anymore, it's this other one.
Yes.
You want it? This is what you want. Otherwise, I'm keeping my stock.
Exactly. And you already took the order
Yeah.
from the merchant, right?
Nah.
So exactly. But, and another critical thing, strategic investors or investors with deep pockets.
Yes.
Because when money dries up, then no one new is funding, you go back to your investors. If your investors don't have deep pockets, then you're screwed.
Yes, you can't run. Yeah.
Yes.
I think, welcome to TOAC, Tales of an African CEO. Today we're in Nairobi, Kenya, with an outstanding founder, Tesh, that I've known for 8 years now, something like that.
Yeah.
And I'm really, really happy to have him on board because he's been a multiple founder since uni days. He can tell us a bit more. But yeah, without taking too much of your time, Tesh, tell us, who is Tesh first?
Thank you so much for having me, Steve. And I remember you're one of my first angel checks. I appreciate that. And you've been supportive throughout this journey, this roller coaster. So appreciate it. So Tesh is an African first. I'm Kenyan. I love technology. I love the continent. So over the last slightly over a decade, I've been building technology solutions to solve African problems, African people.
You're going too fast, please. Yeah. Who is Tesh? Like, you're raised in Kenya, you studied computer science or engineering or letters. What did you do? Tell me.
Okay, cool. So I grew up in the outskirts of Nairobi, in a place called Ngong. Close to Ngong Hills. Yeah, I've climbed Ngong Hills many times.
Compulsory with the family.
Yes, 100%. I studied in local schools around Nairobi and ended up in a computer science class.
You see.
At the University of Nairobi. So I'm a Nairobi boy. Basically, I love this city. When I remember at some point in high school, I really wanted to study architecture.
Oh, okay.
But then my cousin introduced me to social media, and I never looked back. I was like, I want to build this something like this, So I decided I was going to go into tech. So computer science. Before going into undergrad, I became an entrepreneur. Maybe because I saw my mom doing her hustle and there was just a bug in me. So I started selling sandals in church, in different places. I just wanted to make an extra buck, not because I needed it initially. So I realized I love entrepreneurship. Then I went into something more professional in line with what I liked, which was graphic design and web design. So I'm a creative. In high school, I studied art and design. So I have that creative design thinking side of me as well. So graphic web design was my first business. And I ran that while in campus.
Nice.
For quite some time. I moved out of home and I would pay my rent and all that. So I
That's graphic design.
Graphic and web design. Yes.
Oh wow, interesting.
Yes, and started learning coding while in second year. I partnered with my current co-founder. So we've been co-founders since then. 2011.
Utati.
14 years now.
Utati.
Misongo. Yes, so he was my classmate in computer science.
Oh, wow, okay.
And I got a lot of work and I needed somebody to help me. So he was the smartest guy in the room. So I told him, please help me with this project. And that's how we started our software consulting business. So we graduated from just building websites to web apps and to fully blown systems.
That means you even paid your schooling, things like that?
So Misongo paid the schooling. I was lucky. My parents paid my school fees, but I had a lot of money to do other things, to enjoy. So that's
pretty cool.
That was fun.
Cool. So what was the first thing you built? Like the very first thing you built?
Yes.
With your own software, except for the web design, etc. Like the real...
Something, my own startup. So the first product I built was I was in second year. It was called Tropas.
Okay.
It was a marketplace to link African talent, footballers, to to global platforms, so they could
okay.
play in Europe, etc. So we wanted
Yeah.
to document them, you know, help agents find them. I love football. I support Arsenal. So those are
Yeah,
so
no,
naturally
that's
for
why
me.
we're not going to be your friends. Okay, Troopers. So
Yeah,
yeah,
so
first
Troopers.
platform. Did you manage to sell it?
No. So it failed terribly because we realized the cost of producing, you know, the content. You can imagine all these leagues are not well covered.
Yes. In
You know,
terms of movies, video, camera, sound,
exactly.
all the things that you see next to the pitches, you have rails where the cameras go, all these
Exactly.
things. Yeah.
So, and the idea is you bring people from grassroots, people with talent, and expose them to agents abroad without those guys having
without
to come.
all these frauds.
Yes. But by then, I didn't realize how complicated that would be.
Yeah.
But it failed because, we just couldn't get the right coverage. It would be expensive.
Yeah.
I can imagine if you're just shooting a podcast, how expensive it is. Now you're trying to cover people across,
global.
you know, find talent. So that failed. The second one was called Entrepreneurial, funny name. It was based off our experience tendering for software projects, and it was very manual. So we decided, let's digitize this tendering process. That failed for obvious reasons. No one wants transparency.
No, exactly. They want to send it to their friends, and nobody's aware. They get the quotes, and then you're good.
Exactly.
Yeah.
So
interesting.
It made sense on paper, digitize this process, but in reality, didn't work out. The third platform was called Cloud9.
Got to know,
So Cloud9. But this time we just cleared campus. So these two projects initially were in campus, and we just cleared. We built Cloud9 as a travel tech.
Yes.
So it's today's version of Airbnb experiences.
Exactly, so with the Hotel Online having it,
Yes. So Hotel Online ended up acquiring Cloud9. So that was somewhat successful. And then we started, after Cloud9, we started MarketForce.
So the tech development company was Mesozi.
Yes.
So they started doing all these other projects, etc.
Exactly. So initially we had Cloud9 and we had MarketForce at some point.
Yes.
So MarketForce started garnering traction as a Salesforce automation company. So
for retailers.
Yes. For manufacturers, distributors. Initially for financial service providers. And that's based on the idea that across the continent you have sales agents who are foot soldiers who will go hawking different solutions. Whether it's loans, whether it's insurance.
They're on the ground.
They're on the ground.
You can use them as channels to distribute wherever you need.
Exactly. And so that was pretty scalable, and we got a number of high-profile clients in financial services, in manufacturing, oil and gas, and that was how MarketForce initially took off. It was bootstrapped, you know.
I remember that it was the breakfast we had at that Java house that has been changed since. I remember very well.
Yes, exactly. When I was pitching this idea, I think you're angel number maybe 2 or 3.
Oh, really?
You came in really, really early.
Very early.
So at that point, we had started contemplating the idea of you have agents selling to people, especially to merchants. So they will go and collect orders for merchants, from merchants. Why not let the merchant order directly from the manufacturer?
Cut the middleman.
Cut the middleman. And it ended up being very interesting because as we're thinking about that transition, COVID happened. So our primary software service business started to suffer immediately.
For sure.
Cutting down people. All these agents who are meant to go to the field are now not
stuck in the house.
Exactly. So direct to consumer became
dead.
An overnight thing. So we started contemplating the idea of Reja Reja at that point.
Yes.
Funny thing is, we had been applying to Y Combinator
Yes.
with a SaaS idea.
Yes.
And the biggest question was, okay, how are you different from Salesforce? You know, is the market big enough?
For,
and all those
for the
questions.
similar things, yeah.
So we had applied to YC twice with our
wow.
initial MarketForce idea. With Reja Reja, we applied once, and in summer 2020, we were the first fully remote batch who were accepted
Yes,
with
yes.
that idea.
Yes, with the Reja Reja.
With the Reja Reja idea, and that gave us some good runway to
and
build
exposure.
the product.
That's a
And
key thing
exposure.
for YC.
100%.
Yeah.
To take the product to market.
Yeah.
And very quickly, we closed our full round that
yeah.
we had been trying to close. So thanks to YC.
Yeah. How was the demo day at YC? I'm very curious to see your in hindsight.
Yes.
How was it?
The
virtual demo day then.
Yes, it was the first full virtual demo day.
Yeah.
It was interesting because I don't think I've had ever since then so much inbound interest at one time.
Yeah.
I think my calendar was booked for like 2 weeks. Every day I had an investor call coming out of demo day.
Yeah.
And it's interesting because we graduated YC August 2020.
Yeah.
And within like 6 months, we had raised an additional over $1 million in new capital. So it was very catalytic to our journey. And it enabled us to build out Reja Reja. So Reja Reja was an app. We give the app to merchants. Merchants order for inventory. We figure out a way of getting inventory to them. It sounds very simple.
You remember the story I told you about the tarmac?
Yes. Exactly.
That's exactly it. You think that you can do it, but actually you have to build the whole thing.
Yes.
So I used to be in poultry industry before, right? In agriculture.
Yeah.
And I always tell people, look, you can create a farm anywhere you want in Africa.
Yes.
But what you need to manage is from the farm to the main road. This is rough road. By the time your eggs get to the main road, half of your eggs are already broken.
Yes.
And when you get to the main road, you need to make sure that you navigate like those Mombasa way, slalom. So the infrastructure is a critical thing, or the logistics, the supply chain.
Absolutely.
In anything you do,
Absolutely.
Yeah.
We were dreaming of a very beautiful reality. This guy orders for inventory. They're logistics guys. They receive the order. They pick it up from the distributor or manufacturer. They deliver it. It's simple. Aye, man. Whoa. So what is funny is, what's super funny is we decided, okay, let's work with distributors who already aggregated goods from different manufacturers. So it's easy, we have one point of collection.
Yes.
This guy is a middleman. They are how distribution is organized is you'll have regions with different distributors. So this guy owns a certain region.
Catchment area.
Yes. Exactly. So we came to them. Day one we were friends. Day two we were friends because I came. We put the initial order in the trunk of my car and we delivered. The next day we came with a pickup. The next day we came with a truck.
Now a van.
Yes.
There's no business for them.
Yes, so we started eating into their market share.
Yes, exactly.
Competition. We got to 10, 15 trucks from one distributor. They started sabotaging us. So what trucks weren't being loaded on time. So the prices changed.
Last minute when you're going to pick it up.
Yes.
I don't know, it's not this price anymore, it's this other one. You want it? This is what you want. Otherwise, I'm keeping my stock.
Exactly. And you already took the order from the merchant, right? So that's how we ended up setting up a warehouse, our first warehouse in Nairobi, then another warehouse. Then we ended up at full scale, we had like over 20 warehouses across 5 countries. Wow. It wasn't what we had planned.
It's supposed to be digital.
It was supposed to be just a digital platform. Own no inventory. We had drunk the Kool-Aid for Uber and owns no taxis and Airbnb. So
not the same infrastructure, my friend. Not the same.
The infrastructure is not the same in this continent. So that meant we needed to raise a lot of capital.
Yeah.
To
CapEx.
CapEx. The CapEx, the operational costs especially were a lot. You are leasing vehicles. You still don't want to own vehicles. The person you're leasing for has their margins. You're competing with a distributor who owns their vehicles. Some of these distributors even own the property.
So they don't have any cost, yes.
Yeah, so these guys have been trading for, 30 years.
Yeah.
So they've figured out how to reduce their costs significantly. You're competing with the same guy. Over time, he's built muscle with the manufacturer.
Yeah.
So he's getting a lot of rebates at the back of the tent that you are not aware
privy
of.
So it's funny because it seems to me a typical case of a collusion between a certain number of actors who have been there for a long time. We were seeing these young people coming and it was like, okay, we're not going to let you in, my friend. Come, we've been here, we'll stay here, you'll be gone.
Exactly. So that's what they're playing. That's the games they're playing. So, I mean, very interesting lessons. Just the complexity of building a business. Price wars. So we also ended up in an environment 2021. Where
post-COVID, still things are reeling, interest rates.
Yes. So the surplus of capital in 2021. And that meant we, as much as we were well capitalized, a lot of our competitors were also well capitalized.
Or more.
Yes, or more capital. Actually, for us, we were the underdogs, even with our massive raise, right? And so we just thinking about, okay, how do you win? How do you try to differentiate yourself in such a space? Very, very difficult. And it boiled down to price and efficiency. So if you have deeper pockets, you can survive longer, you have a massive advantage.
Runway, all these things come into play.
Exactly. But, and another critical thing, strategic investors or investors with deep pockets. Because when money dries up, then no one new is funding, you go back to your investors. If your investors don't have deep pockets, then you're screwed.
You can't run. I think maybe I pause on that because it was that period where it was growth at all cost. Even if you're loss making, you can still push because it's growth. And then suddenly, it turned. It needed to be profitable. And that thing is maybe, I want to pose that because it's always interesting to me from an investor's perspective to also see your perspective as a founder on those changing investor priorities, right? I think what would be interesting for me is what is your lesson in that space that makes you look at investors differently, especially doing some sort of DD on them, because a lot of founders, I tell them, they do DD on you, but actually you also need to do DD on the investors. Right?
Yes, so I think two things around that. One is, unfortunately, a lot of investors tell you what you want to hear in the moment.
Are you sure? Is it not the way around with founders? We want to tell you.
It's two-way. When you're a hot company, we were a hot company at the point. So investors are trying to close you as much as you're trying to close them. It's funny that this is linked to the second point. That money is scarce. Money is scarce. So you'll find if you're a hot startup,
you want to take as much as you can.
Yes, you want to take as much as you can. One, but you also don't realize, you don't see, it's harder to see through the investor.
Yes.
Unfortunately, we also have a very nascent ecosystem. So you might ask other people, have you
managed that?
Yes, but even the investors, you'll find that fast fund, etc. So you can't really tell
how
the real
savvy they are.
DNA of this investor. Are they going to turn on you like that about profit? And running a massive operation like we're running, hundreds of employees, it's a ship. So turning a ship overnight is
very difficult.
It's not even overnight. It's like, okay,
over 6 months.
You just turn this thing. You're going like this.
Now I want to see profits.
Yes. And if you looked at our financial model, by the time we're raising our Series A,
Yeah.
our profit was gonna come in maybe 4 or 5 years.
Oh wow. Okay.
You know,
yeah.
we had built an engine around, you know, just expansion,
growth,
growth,
yeah.
customer acquisition, and that we did really well.
Yeah.
But when it comes to the bottom line, there's so much efficiencies that are needed to be fixed.
For the
It needed runway to fix them.
Yes.
So anyway, I think in hindsight, the mistake there is you know, venture capital is great.
Yeah.
I believe it works really well for the Amazons who have super patient capital, right?
Yeah.
And the capital there is also not as scarce.
Yes.
There's a lot of money flowing. For us, African entrepreneurs need to take a different
route. I would say bootstrapping is best. Let me do a pause on that. You know, one of the things I've noticed over the last 10 years of investing on continent is, and that's something I realized very early on in 2015, where I said, look, in Africa, potential African investors are asset rich, but cash poor, right?
Yeah.
That's number one. And then on the pecking order of money, it's really mind-boggling because I realized that for a lot of people, having access to the money, however the interest rate and the condition, is the primary goal. And then only, now I have access to money. Now you start looking at, what's the color of the money? How is it? But because of the scarcity of capital, risk capital, we only look at, this money, right? Whereas elsewhere, there's this type of money, I don't want it. I would prefer this one. It's still money.
Not all money is created.
Exactly, yes. Exactly. Yeah, absolutely. Yeah. And unfortunately, we tend to be fed by a lot of grants and programs and things. Whereas if there's a way to unlock the local capital, that is more risk capital, you make a lot more sense, right? And so, that psychological logic is something that I'm always very conscious about.
Makes sense.
So on the maybe to finalize on the investor journey, I mean, what would you recommend, a first-time founder today on the investor relationship? Because what you said is still very much the case. A lot of entrepreneurs, especially in the healthcare that I know, or in education, which is less invested, they're only just looking for the money. First, right? And then, I want somebody with deep sector expertise, etc. But it's still very much the money. Right?
Yeah. So, what I'd advise a founder, and this is it's hard. It's hard to advise a founder because
you're not in the same seat.
You're not in the same seat.
Sure.
You know the situation. Like I'm sure you've looked at so many thousands of companies, and they look different. Whether you bootstrap or my advice would be stay as close to the profitability line as possible.
Yes.
Because if you're super profitable, an investor again is worried. So I'd say actually, if I was put it in one sentence, I'd say find your tribe. And finding your tribe is not it's a chemistry thing. I'm sure that most times in a first call, both the founder and the investor can tell if I want to work with this person.
Exactly.
There are questions that an investor will ask that might piss you off, and they will piss you off forever. So don't just take the money for the sake of the money.
Cents.
Yes,
that's
6 cents. Yes, it's hard to explain.
Gut feeling.
That thing. It's like finding a business partner.
Yes. Yes. I can work with this person or I can't, but it's fairly immediate. Yes.
Trust that gut. If you second guess, then do more diligence.
Yes.
Talk to other founders, etc. I think the good thing you mentioned earlier is now the ecosystem is continuing to mature. So now we have track records as founders, we have track records as investors. And that's
more. That's very, very helpful. Okay.
At least I can vouch for you. For example.
Exactly. I can do the same. I think we can talk about something that a lot of investors struggle with is the limited exit. right? And then we can talk about what you're doing today.
Yes.
But I want to touch upon that a bit because I've had a lot of conversations recently where it's look, what are the exits in Africa? It's like, actually, let me ask you a question.
Yes.
What has been the biggest tech exit in Africa for the last 5 years?
The biggest?
Yeah, in terms of valuation exit, like the actual exit value.
Yeah. I can't remember the North Africa ones. I can't remember like the number on Expensia, etc. But I think Paystack comes to mind.
Yeah.
To Stripe, I
200
think.
million?
Yeah, 200 million.
There's a bigger number than that.
Yes, there's definitely a bigger number. Is this a South Africa one? No. Deal that was 100 million.
No, so the reason I'm saying that is because very often people don't realize that up until now, the biggest tech exit in Africa is actually InstaDeep.
Yes.
Biotech met to BioNTech.
Yes. That was 500?
Yeah, 526 million pounds.
Wow.
That's $648 million.
Well, this was from North Africa.
Yeah, Tunisia.
Yeah, I think it's the one
that's the one. Expensive, Tunisia. Exactly, that's the one.
Tunisia. Okay.
Tunisia. And
amazing.
People don't realize that everybody's looking at fintech exits, but actually it's a DeepTech one from Tunisia. That is the biggest exit so far.
Yes.
Right?
I mean, yeah.
And so that's why I like asking that question.
I like that you brought that point.
Yeah.
Because the biggest challenge for our fundraise, current fundraise, in our business, was that the question was like, can SaaS work in Africa?
SaaS is dead, you know that. AI agents are there now.
Yes. So we've transitioned to AI agents actually.
Yeah.
So we have a mixed model, SaaS and AI agent.
Yeah.
It's not dead yet.
But not in Africa. Not in Africa. We got a bit of leeway, but
we're catching up.
Yeah.
But it's interesting that you've mentioned something that is very annoying.
Yeah.
I feel like some investors in Africa need to do more homework around the potential of certain opportunities.
Yeah.
So, for example, right now, pitching an AI agent is like, okay, that's, it's far-fetched.
Yeah.
Even SaaS by itself, there's not been much success outside South African companies who've exited globally.
Yeah.
But I find people just investing in the same old stuff, yet the biggest exit came from DeepTech. I'm sure if those guys try to raise from African investors, they wouldn't be able to raise.
Yeah, absolutely.
So I think, in short, guys underestimate the potential. We have the talent we have on the continent for building global products.
Can I tell you a story about that?
Yeah.
Over the last 10 years, what I've realized is that a lot of founders from the diaspora outside of Africa, or even within Africa, when they want to do something, they think about their home country, quote unquote.
Yeah.
So a Ghanaian will go back to Ghana, a Kenyan will come back to Kenya.
Yeah.
But what I realize is that a lot of outstanding founders are actually from different countries. So I know Ghanaians here in Kenya that have been very successful.
Yes.
I know Nigerians. I know Cameroonians.
Yes.
And other places, right?
Yes.
So what I've realized for me at least is it's a Pan-African market, yes, but it's actually global.
It's a global market.
And there's even a term they used to use, which is GLOCAL.
Yes.
Local solution for global applications, right? Yeah. And so I think African founders today should be thinking, we're building in Africa, from Africa, but with a global perspective.
Yes.
And sometimes I tell founders, look, this product or service you've built, okay, you've done it in Kenya, but I'm pretty sure this thing could work in Chile.
Yes.
Have you thought about it?
Absolutely. And we're seeing amazing, we're seeing that with the likes of Move,
yes,
likes
Move,
of Asa,
yes,
guys are showing Nala, guys are showing that you can.
Yeah, you can build a company.
It's very exciting to see.
Absolutely. And you'll be even shocked that InstaDeep is one of the biggest solutions that are managing all the railways in Germany.
Wow.
The engine on the industrial side is actually their AI engine is the one managing a lot of the rail systems in Germany.
So basically we're thinking small. That's what you're saying.
Exactly. No, true.
So, and our investors need to help us think bigger. Like the feedback I'm getting from fundraising, and I'm just being open because this is the reality, is one, like SaaS doesn't work in Africa. Like the expertise you need to build this AI agent, it's not like that complicated.
The thing we're done with.
Then a focus on the markets. It's like, okay, what are your target markets? Then they do sizing on Kenya, sizing on Nigeria,
South Africa, etc., etc.
Like, bro, the world, like, yes, you have your beachhead markets.
Yes.
For me, I just happened. Kenya happened to be my kitchen because I live here.
Yeah.
But we're building for the world.
Yeah.
You know, so.
Yeah. But you see, the perspective is that, you can't build something in Africa that is as competitive as a US or Chinese or an Indian solution or Estonian, whatever it is, right? And that has to be stopped.
Yes.
Yeah. That has to be stopped.
It's true. It's true in very few sectors or segments where it's like super big technology, maybe like this. Yeah. But for the majority of SaaS or fintech or
anything that is software engineering, programming, etc., we can do as much.
Exactly.
So that's it. No, that's a good point. I think hopefully this, Tales of an African CEO will give a lot more people this kind of perspective so that we get the message out. We're building in Africa, for Africa, but also for the world. Right? Yeah, absolutely. So let's spend, the last few minutes we have talking about Chptr. Yes. Yeah. So what is Chptr?
Yeah. So Chptr is a business that is built for the current age of e-commerce, which is social commerce.
Social commerce.
Yeah,
yes.
because what's happening is a lot of buying now is happening through even product discovery, a lot of communication with customers happening through social media platforms.
Yes.
Because that's where consumers are spending time. So Chptr has built AI agents that any business can deploy to serve their customers across these platforms.
Okay. So that means Instagram, WhatsApp, etc., etc.
Yes. WhatsApp, Instagram, and then future we're building on TikTok.
Yes.
We have Facebook, all these platforms. So right now, we've seen a lot of great traction in e-commerce because now you want to buy a dress, you find it on Instagram, you DM the business. So Chptr's AI will respond and say the dress is available, this is how much it costs, here's where you pay, close the sale on your behalf.
Okay, it's really on the merchant, so it's a B2B to C.
Yes, it's a B2B, but the user the user is a customer, and that is both an end consumer and a merchant. So the merchant will have a dashboard where they're seeing all their social media sales, because now social is an official sales channel.
Yes.
Outside their physical store.
Yes.
And then they're able to manage all those sales.
Can I ask you a question on that? It's a bit of a technical one.
Yeah, sure.
I've noticed a lot of people, especially in Kenya, I think, put a lot of the things they're selling on their WhatsApp status.
Yes.
Right? Yes. It's more in Kenya than elsewhere I've seen.
Kenyans are queer behavior.
Yes. And so is there something that you do with that, or is more really on the communication side, on the actual WhatsApp groups?
Great question. Yeah. So that's actually on our roadmap. Okay. You'd be able to create a marketing campaign that not only goes to WhatsApp,
your messages, but also on your posts, on your status.
To your status, on your Instagram stories.
Yes, exactly.
We'll have something called click to WhatsApp ads.
Oh, wow, okay.
So you can create an advertisement that goes to the WhatsApp group, but also goes as an advertisement across these platforms.
Oh, nice.
And when you click, it's a conversational sale. Yes. Rather than going to an e-commerce store, because that's not how sales happens. Yeah.
How do you manage the payments after?
Yeah, so we integrated to partners such as Paystack, Flutterwave, depending on the country.
Yes.
From day one, we've been deliberate about availing the solution across as many countries as possible. Okay. So we don't intend to build the payment infrastructure. We
just plug in APIs and things. Okay.
Yes. So as a merchant, you just choose your checkout option.
Okay. And which countries are you present in then?
So today we're in Kenya, South Africa, Nigeria, actively with customers.
Yes.
I'm not sure when the podcast goes live, but we are rolling out 8 new countries by the end of this month.
Okay,
So we'll be in 11 countries
Okay.
with payments and everything.
Wow.
However, there's some features that are available globally. So for
Okay.
example, sending a WhatsApp marketing campaign.
Yeah.
Meta is a partner.
Okay. Through
So
Meta. Okay.
yes, through Meta, we
Okay.
were able to
Send that.
let anybody do that.
Nice. Very nice. Okay. So, how many people are in Chapter today?
So today we're just over 25 people.
Okay. Okay. That's still kind of manageable.
Yes.
Not the hundreds that you had before.
No. I think this can be a unicorn with 50 people. So that's exciting.
Yeah. With especially AI, etc. You don't need that many people. Exactly.
Yes.
So
I think it's worth mentioning that our latest product is called Pluto.
Pluto. Okay.
Yeah, Pluto is WhatsApp APIs.
Okay.
For any fintech, any large company that's looking to build on social media, social commerce, they're
Nice.
able to access our APIs
Yes.
and build on top of the infrastructure we built.
That's
So
nice.
it's infrastructure we had built for specific use cases. Now
Yes.
we're building it to any business.
Wow.
And it's taking off quite well as well.
Maybe a strategic partnership, and I talk about it a lot in a lot of the conversations I have, which is a lot of the African startups don't always think about really leveraging existing infrastructure. So telcos,
Yes.
banks, insurance companies, etc., etc. And that, what you just said, triggered my mind to say, look, actually, you can go and see the banks, notably, because they have customers
Yes.
who can use that to reach out to their own customers,
100%.
right?
Yes.
Telcos to some extent.
Yeah.
Insurance is not really that, but yeah, more the banks.
Banks and telcos.
Yes,
so we've
exactly.
signed a bank and we've signed a telco.
Okay, great.
So yeah, we're on top of that. It's an amazing distribution strategy because these guys have figured out they already have the customer base. So
absolutely.
it works.
No, this is great. This is great. So, what's the future of Chptr? Let's say 5 years. IPO?
Good question. I mean, we have amazing partners like Meta, like Shopify.
Yes, in the US, UK.
Yes, global. These are global companies. So if you think about exits, hopefully those are some of the kinds of companies that can acquire us.
Exactly. Yes.
We figured out the continent. IPO is an option, maybe not in 5 years, maybe in 10.
You never know if you grow fast.
Yeah, you never know. But I think the idea is to build a very sustainable business, a generational company.
Yes.
Today we're just focused on making it work. We're looking to be profitable this year. That's something we're doing differently.
Yes.
So that any new dollar is growth.
Yes.
Capital is not to survive. But very excited about the future. I believe this is going to be a massive business.
Absolutely. Last points for our Tales of an African CEO audience. What would you recommend them to do to build today if you had the time?
Wow. That's a great question. If I had the time, I think there's 3 main sectors where I see a lot of potential because there's a lot of problems.
Okay, go for it. Is there government in there?
So actually GovTech is interesting because we need to support the government in solving some of the problems. It's just highly political. I'd say health.
Yes.
I'd say
that I can't disagree with you
for obvious reasons. But I think there's a lot of opportunity in health.
Yes.
Agriculture.
Yes.
And
maybe what part of agriculture specifically? Because there are a number of people, agri-tech, they're doing too many things. What kind of thing do you think?
I think incentivizing. So we have a lot of arable land.
Yeah.
So you can figure out a way of making that land productive.
More useful, more productive.
Most of Africans don't struggle with food, but linkage, market
linkages, etc.
So there's still a lot of opportunity there. What was the third one? The third one,
health, agriculture, education,
job creation.
Job creation,
Job creation, yes.
But that means job creation is more manufacturing. Or digital skills? What is it?
Digital skills. Digital skills, I think, because of the young population.
agree with
Yeah,
that.
yeah. I think
Yeah.
exporting that skill.
Yeah. Or, yeah.
Yes.
So staying here, I mean, the Andelas, etc. I've tried
Yes.
a model. I think
Yeah.
the other ones, which is
Yeah.
the olden days of the Tatas, etc., software consulting,
Yes.
outsourcing, etc. I
BPO,
think that
all
can
those
be
things.
BPOs, exactly.
I
Yeah.
think it's still
Very
massive
much,
opportunity.
yeah, I agree. I agree. I agree.
Yeah.
No, that's good. All right. Tesh,
Yes.
thank you for coming over. I appreciate. And this was Tales of an African CEO. Stay tuned. More to come.